Hey, it's Mack with PriceActionTradingSystem.com, and it's Friday. It's December the 6th. This will be our chart lesson for today, and it's a pretty good trading day today. We got some nice movement again. It got a little bit slow after 10 o'clock, but it's steadily been upward. And it wasn't exactly beating the doors down to travel down here, but it's a steady downtrend that followed the rules precisely. Clear channel here with a little break and then a new low, and then we've been moving up and we've got a break here. Basically what I'm looking for possibly to go up is here's leg one, and so if you got a measured move, this line right here, just to show you that. So that's what I was looking for as a target. Doesn't look like we're going to make it unless something big really happens here quickly. We could come up short. We may end up making it. Who knows? There's still an hour. It's a little before 2 o'clock. So we've got still, hour and a half left in the trading day, maybe a little bit more. So a lot can happen in a short period of time in the market. So we'll have to see what happens. But I'm looking at this as possibly being a bigger trend line, and, where it really fits, it's hard to say. So I'm not convinced. I don't have enough evidence here to prove to me yet that I do have a bigger trend channel here. So, of course, I did draw this line here. When we came up short, I pulled it up just a little bit. Seems to fit, but I can't seem to, get anything that fits well enough on the other side that leads me to believe that, for sure that we got a bigger channel here. So really the only thing you can do, let's just take those off because I wanted to show them to you what I was looking at, and that's how I usually do it. But I just don't see anything that leads me to believe that, that trend line's rarely come into play except once, and if you drew it off the first two swings the way we normally do, it came up short of that. So it's hard to say if that was a confirmation or not, particularly when you can find anything that fits off the other side. I will show you this just because I know there's a lot of you that like to look at the trend lines. You do kind of have a trend line here maybe, like so, but then you get the same problem. I don't see anywhere that it fits well enough to prove to me that that's it. So it looks like we started out in what looked like it was going to be a trading range again. We failed out the top. We kind of had a measured move fall out the bottom. Then we reversed and we traded up. We got the little trend line. We had a little channel trending up. We got a break. We got a move to, I can't remember if it made a new high or a perfect double top, but that's close enough. It's a perfect double top. And then we traded off. We got this channel working down. We had a break of it, two legs down to a new low. And then we reversed and we've been moving up, and we just now got a break of that trend channel. So that's really, if you just follow this, the temporary channels, that's all you had to do today. Again, it looked like a trading range early on, but that never really panned out. And that's 2 mornings in a row that they made it look like it was going to be a trading range. You saw yesterday it looked like it was going to be a range, and it trended down, and today it looked like it was going to be a range, and it's trended up. So that's why you got to be able to switch gears. So I did get a lot of feedback about my little conversation yesterday about being patient and understanding how hard this is to do, and that you can't learn it overnight, that it takes some time. So I appreciate the feedback from that, and I don't know why, I just felt compelled after getting a few emails this week to do that. And I always get replies back from people that say, hey, you hit me, it hit me head on. It was a perfect conversation. I needed it this time. So I don't know, when I get those feelings, I just do it. So sometimes, some of you may just think it may sound like one of my soapbox rants, but to others it obviously struck home, and so I'm glad that it did, because I probably don't say that enough, and I don't want anybody to be confused about how difficult this is. Trading's probably the most difficult profession in the world, and there's no doubt about it. But if you make it, it's probably one of the most rewarding, because you have a way that you can make a very nice living with the same type of basically with a part-time like job that you can work from anywhere in the world, from home, from an office, wherever you want to work. You don't have to deal with people. You don't have to deal with customers. I mean, it's the best of both worlds, but it's not an easy, it's a closed door society, and it's not easy to bust that door open and get inside. So I'm giving you the keys to do it, but there it takes you got to earn them, and it's not easy earning those keys. So I guess I'll leave it at that. And let's talk about the chart today and what I saw. Um, there weren't a whole lot of trades today, but the ones that were here were real solid trades for the most part. A couple of them were only good for a scalp, but most of them were, pretty good trades. A few of them have had runners here that you could catch, and this one actually is the first trade of the day, and I meant to change that one to green, and I didn't do it. It's a little bit aggressive, but it looked like a trading range. We actually had we did have a trading range going on actually. And let me show you, I've been doing this lately and people ask me to do more of it, but as you can see early on, we kind of had a trading range. And these were your highs right in here, and here were your lows. And I usually try to find where you get the most touches with the closes, and that, you could have had it here. It didn't really matter at that point. And then we fell out the top kind of. That we really fell out the top before it actually looked like a range. So I don't really call that a failed breakout. But we did fell out here. We fell out here, and then we came back and kind of had it's a little bit further out the top than it was the bottom. But hey, we traded up into this thing. But you still fell out the top, then fell out the bottom. And then it started rallying here, and it turned down right off the top again. But and it went straight back down to the lows again, and then it turned up. And you might have even thought about going short if you were trading then. It would have worked, but we had a long bias here, so I liked going to the long side more than the short side. I wanted to probably have a second entry, and you only had a first entry. You got your new low, and that's a first entry. But it's the same thing going back up. You only had a first entry going back up. Well, actually, you had a second entry if you're counting off the lows. First entry, pull back, second entry, and I really thought we were probably heading to here. Again, I wasn't really expecting this trend to come out of this, but we did have an upward bias. And if you go with this first leg up, started right about here. That's what I'd probably call. I'd call that the first leg up. And so then you're looking for a second leg up, and you can see it went fairly closely. It kind of overshot that, and that usually tells you the market's stronger than what you were expecting. And so this was a little bit aggressive, but this was the first trade that I really liked. If you were real aggressive, you might have even gone long down here, but you had to use a limit order, and it would have come back and filled it too. But I just think it's real aggressive, especially after what happened yesterday. If we'd had another day like yesterday, it may not have come back enough for you to scalp out, and then you're in trouble. So I didn't like marking that one, but it would have been a second entry long. Notice the new high, first entry pullback, second entry. But you didn't really get rejection down here. It ended up going on out of here. Now this is what rejection looks like. Notice how it traded. It opened up here, traded it opened right here on its high, traded all the way down, then reversed, and that could have easily ticked one tick higher and closed on its high. So that's almost like a big reversal bar. So, and that's the same thing coming down. So if you'd have taken that one, I mean, I probably should mark that one in green too. But again, there is a long bias here, so that's one reason I'm hesitant to mark that one. But I'm going to go ahead and mark it just in case you took it. It definitely would have worked. And then it reverses here, and it bounces right off those lows, just like this bounced right off those highs. And again, we had an upward bias, so I liked it to the upside. And you don't know it's going to take off like that, but it does. And and any runners were safe, and you could still be riding them out today. I would have definitely exited them when this trend started down. If in my opinion, that's how I would handle it. But if you held on, you could still be riding high up here to right now. So just keep that in mind. And then guess what? We make a second entry short right here after a little failed break above this high. Oops. I can't seem to get a hold of that bar right there. Also, I failed to mention, notice you got a little channel working down here, and that was a break. And so that might have been another reason to think about that short too, but I'd be waiting on the second entry and not taking that first after it went right through the EMA. That's not a good sign. You should have gotten some rejection there. And then this one, then it turns and bounces. So I admit, but that's like you got the break of the channel and a retest attempt that couldn't go any lower than the trading range. And that's common to see that on a trading range. The support's too strong and it can't get back to make a new low on the retest, so it just turns and goes higher. So I wanted to throw that in there too. But then you get a second entry short here right off the top, and you don't want to be going short below that bar, and then you finally get a somewhat bearish bar. Let me make this bigger. It's kind of hard to see that. But notice it never breaks lower, and then this one closes, and it's just an inside bar. Well, guess what? That's congestion near the highs. You're not getting rejection there, and it breaks lower and it traps everybody. That's a failed second entry short. Let me show you. You got a new low here. You're pulling back first entry, pulling back second entry. And this is a good place for a second entry to occur off the low, but you need a better setup than that. Plus, you got this little channel working up here, and it bounces right off of that. You know, I like that for a long. Normally I would say you might want to wait on it to break out and get a second entry, but it's a failed second entry short where you would be thinking, a lot of people would be thinking short, and I'm talking about smarter traders because they know it. Breakouts normally fail, and so I guarantee a lot of people got trapped there. If you did get trapped there, you got to exit when it breaks higher. But it's not a very good setup, at least not on my chart. So, you know, there's no reason to be going short right there yet. You'd be better off to wait on a second entry, and you never got that. Second entry counting off the high. So this is a first entry. It pulls back, and it just keeps going. It's not a pullback. It's a trend, and it bounces right off the trend line. I like going long right there because it's a failed second entry, and it broke lower here and turned up and then broke out this high side. So that's where you can automatically go long right there. And it takes off. Any runners would have been safe here, and you could have gotten a few points out of them. Then you get a two-legged pullback. You do get a break of the trend line, but you're expecting a retest, especially a move like that. There's plenty of room there. You get a few extra ticks out of it, and it makes a double top, and then it starts selling off. There was a failed second entry long there, and it kind of confirmed that trend line. So let's go ahead and make that green. I didn't like it. I wasn't going to take it, but there is a failed second entry long right there. So if you went short there, it's a little aggressive because it's not a very good setup. There's a lot of overlap, but I'll mark it just in case, and it would have worked. But when I didn't really feel comfortable going short here until you had that failed second entry long right there. Or it's really a second entry short, I guess, off of that new high. First entry down, pullback second entry, and it's kind of a breakout pullback short as well. So I like that short right there. By that time, you did kind of have your channel setting up, and you broke out of all this congestion right here, pulled back, and then turned down. It was easy scalp, and then you bounce off the low side, but look at all that overlap in those little bars, and it's just, you know, you're expecting a rally any moment. Just stay clear of that. You don't want to be going long, though, because if you look what would happen if you went long there, and then it goes down, and you probably get stopped out. It finally rallies. You don't want to take that first entry, though. Aggressive trader might. It did break higher first and turn down and go out the low side, so you might have gone short right there. But I always think it's better to wait on the second entry because it almost always happens, and you get your second entry right here, and it just kind of chops lower. And it was good for a scalp, so if you entered either one of those, you got your scalp. You didn't get much else, and then it comes back and runs your break-even stops, and then you get another first entry, pull back, and there's a second entry short right there, counting off this high. But look at all that overlap, all those dojis, and, you know, it's starting to look like a trading range. You can't go short right there. Wait on something better. So then it would have worked, you can see, but then it pulls back, and look at that big reversal bar. There's the sure thing. You hop in right there and easy scalp. We did have the break of the trend line now, but now you got two legs down to a new low, and you start rallying. And notice you got a little double bottom there, first entry short, pull back a second entry short. But if you drew that trend line right off those first few bars, and there's a bounce off of it right there, nice second entry short after a failed second entry short again, and it takes off. It doesn't go off, it kind of gets hung up here, but it never comes back and gets the runners. It doesn't. So runners were safe there. And it keeps chopping higher, and then guess what? You get another little two-legged pullback. That's a doji. You might have waited on this bar, but if you did, then you got a second entry above this bar a tick better. But I really like, because it's the second entry and it's bouncing right off that trend line, just go long right there. And off it goes. Again, any runners were safe. And then guess what? Another two-legged pullback to the EMA and trend line. And when the EMA and trend line are doubling up like that, that's a good sign, because then you got both of them working behind you as your support. So second entry long there, another easy scalp, and we just been chopping around since then. And here's a good reason. Notice it pulls back. You get your first entry, it pulls back, and it looked like it was going to set up another second entry right there, but it never triggered, and it just kind of chopped around, and it's working its way down here. So until you really, the way I would play this is I would draw my trend line right down through there, and you got to follow your trend line rules before you think about going long again. You can see that there's no reason to go long yet. When you get a break of that and a retest, and a break of this and a retest may only include pulling back to the trend line. It might include a new low. I don't know. We're not there yet, but until you get a break of that little channel and a retest, don't think about going long yet. Yeah, occasionally it'll shoot out there and take off and you'll miss a trade, but that's just the way it goes. And that's what you have to be patient enough and know enough about price action to do that if you want to be profitable in the long run. So we're going to miss some good trades occasionally. Just like this very first move here. I mean, you could have ridden that, actually it would have come back and got your runners probably, but you might have been able to ride that all the way down. But we got to miss that because we don't want to be so aggressive that we cost ourselves a bunch of losing trades. So, but that's what I saw today. Again, from maybe right after the open till now, there's only been 1, 2, 3, 4, 5 trades. There were a couple here earlier in the morning. If you leave out the aggressive ones, there's only 1, 2, 3, 4, 5, 6, 7 all day long. And and a lot of people can't be that patient. They're constantly. They get down here and they're even looking for an entry, and so you gotta. And most of them probably looking for shorts in here when you're expecting it to come back to the trend line, and then you start looking for shorts again. So follow the rules, be patient, talk to yourself, and explain. Talk yourself into doing the right thing if you have to, and it's not easy. But be a predator. Wait on the trades to come to you. Pick them out. Pick out where you're expecting something to happen in advance. And wait on prices to get there, and then do your thing. Otherwise, just sit on your hands. No, it's not easy, but you can train yourself to do it. It may take some people longer than others, but keep working on it. I'm going to wrap it up. I hope you had a great trading week. Hope you have a great weekend as well. We'll be back to do it Monday. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.